Ever wondered how to read stock market candles? Understanding these little figures might seem daunting at first, but fear not. Today, we delve into the fascinating world of stock market candles, breaking down every part and explaining its significance. The stock market candle, also known as the Japanese candlestick, is an essential tool for understanding the movement of a stock's price over a certain period. Picture in your mind a candle. It's not just a wick in the center, it has a body and two shadows. Similarly, a stock market candle has three central parts: the body, the upper shadow, and the lower shadow. Let's start with the body. This is the rectangular part of the candle. It represents the range between the opening and closing price of the stock for a given period. If the body of the candle is filled or colored, it means the stock closed lower than it opened, indicating a bearish period. Conversely, if the body is empty or a different color, it's a sign that the stock closed higher than it opened, signaling a bullish period. Now, imagine the wick of the candle. This is what we call the shadows in the stock market candle. There are two shadows, the upper shadow and the lower shadow. The upper shadow extends from the top of the body to the highest price of the period, while the lower shadow stretches from the bottom of the body to the lowest price of the period. The upper shadow tells us the highest price that buyers were willing to pay during that period, while the lower shadow shows us the lowest price that sellers were willing to accept. If the upper shadow is long, it indicates that buyers were aggressive during the period, but if the lower shadow is longer, it tells us that sellers were more forceful. So what does this all mean? Well, the size of the body and the shadows can give us valuable insights into the balance of power between buyers and sellers. A long body with short shadows indicates a strong trend, either bullish or bearish, while a short body with long shadows suggests indecision in the market. In conclusion, stock market candles provide a visual representation of the battle between buyers and sellers. They tell a story of struggle and competition, of highs and lows, and of opening and closing gambits. The body reveals who won the battle, while the shadows show us how the fight was fought. By understanding the parts of a stock market candle and what they represent, you can begin to predict future price movements and make more informed trading decisions. Remember, the body shows the opening and closing prices, while the shadows reveal the highest and lowest prices. A filled body signals a bearish period, an empty body a bullish one, and the length of the body and shadows tell us about the strength of the trend and the level of market indecision. So the next time you look at a stock chart, don't just see candles. See the stories they tell, the battles they reveal, and the insights they provide. And remember, every candle is an opportunity to learn more about the market and to become a better trader.